Hello, welcome to Global Lens. Over the next 30 minutes, we put the spotlight on all the top stories from around the world. I'm Parikshit Luthra. These are the top global headlines we are tracking. Wall Street cheers as US inflation cools faster than expected on a monthly basis. Consumer price rise at an annual rate of 2.4% in line with expectations. US and China agree on a framework to get the trade truce back on track after 2 days of negotiations in London. US President Trump says deal with China is done, subject to approvals, also claims China will supply necessary rare earth magnets upfront. Elon Musk regrets some social media posts he made about US President Donald Trump during explosive public dispute. Musk says some of his posts went too far. President Trump hits at a truce, saying he has no hard feelings. Let's start with all the market action. Stock markets across the world inched higher as the US and China agreed on a framework to resume the trade truce. President Donald Trump has said that the deal with China is done and the relationship between the two countries is excellent. Here is how stocks closed across Asia. The Nifty ended flat but maintained its winning streak for the 6th day. Stocks in China, Hong Kong and Japan ended in the green. Meanwhile, the South Korean Kospi posted healthy gains, closing at its highest level since January 2022. Shares on Wall Street received a boost after the US reported a better than expected consumer inflation data for May despite President Trump's tariff actions. The consumer price index accelerated 0.1% in May against the expectation of 0.2%. Meanwhile, the annual rate stood at 2.4% in line with estimates. President Trump's deadline to lift the pause on reciprocal tariffs is less than a month away. But what kind of impact will the US economy need to brace for? Joining us right now to discuss this is Eswar Prasad, Professor at the Dyson School at Cornell University and Senior Fellow, Brookings Institution. Eswar Prasad has written books on the US dollar and the Chinese currency and served as the head of IMF's China division. He has also written a piece in the Foreign Affairs magazine about how President Trump was launching a turbulent new era for the global economy with his tariffs. Mr. Prasad, thank you very much for joining us here on Global Lens. Let me begin by asking you about your reading of the CPI data. With inflation coming in softer than expected, is there now hope for a rate cut?
This actually puts the Federal Reserve in a very difficult position because there is certainly a little more room for maneuver because actually the CPI headline number ticked up a tiny bit from the last month, but as you pointed out, came in roughly in line with expectations. The difficulty this is going to cause for the Fed is that it will mean a great deal more political pressure from the White House, with President Trump already calling for the Fed to undertake significant rate cuts, while the Fed is bracing for the potential impact of tariffs on prices, because it is highly likely that the tariffs that are already in place, and some of which might come back on if there are no trade deals struck by the US, those could add to price pressures later in the year. So the Fed is trying to hold its fire, but it looks like there is going to be a lot of political pressure it'll have to deal with.
Right. Do you expect the tariffs and the uncertainty around tariffs to start impacting inflation negatively in the months ahead?
It is possible and indeed likely that the tariffs and all the uncertainty they have created will dent both household consumption and private business investment. So you could start seeing the economy beginning to cool off, which could certainly ease the price pressures. But the remarkable thing about the US economy, at least so far, is that none of this really shows up in the data. If we were thinking about where we were at the beginning of this year, when it looked like a soft landing with a gradual reduction in growth and a decline in the inflation rate towards the Fed's target of 2% might seem feasible, we seem to be sort of on track for that. So everybody is bracing for things to go wrong. But so far, the labor market has held up quite well. Inflation still seems to be on a slight glide path down, and the economy overall is doing so well. So we are bracing for bad things to happen, but they haven't happened yet.
Right. I'd also like to ask you about the good news coming in with the US and China announcing in London that they have agreed on a framework. Donald Trump has said the deal is done. US gets 55% tariffs, China gets 10%. How do you see this? This will definitely be a relief for US investors, especially the tech industry. But do you think this will have a positive impact on the economy in the months ahead?
Now, this is a very positive development that at least the two sides are talking with each other at both the leadership levels and also at the policy levels. And many of the pain points that these two economies had inflicted in each other have looked like they're going to be resolved. So China really wants chips from the US computer semiconductor chips, that is, and the US wants access to rare earth minerals, which China has restricted exports of. So those pain points are going to be resolved. But it's worth noting that what we've heard so far is really about a framework towards negotiations rather than any substantive deal. All we have so far in terms of details is the social media post by Trump. We have not seen any of the details of a broader agreement. My suspicion is that it's going to be a much more arduous road ahead before the two sides can significantly de-escalate tensions. But it's certainly a good sign that the relationship between the two sides, which had been deteriorating, now seems to be on a somewhat positive trajectory. This should help both their economies and also financial markets in these two countries and also the world more broadly.
Right. When it comes to Donald Trump's new tax bill, he's pushing this very aggressively. What kind of an impact is this going to have on U.S. deficit?
That is a very worrying prospect because, as it is, the US has been running very high deficits. And in fact, the gross federal debt to GDP ratio is now about 1.2 times annual GDP. That's 120% of annual GDP. And given the size of the US economy, that is a very large amount of debt. Now, one of the things that's kept this debt from leading to very significant interest rate hikes is the fact that US Treasury securities are still seen as the world's safest financial assets, and investors around the world look to this asset for safety during times of financial turmoil. But things seem to be changing in the Treasury securities market. Most recently, when Moody's, which is the third rating agency to downgrade US long-term credit rating, downgraded that rating, that really had a slightly negative impact on US long-term rates, which has not been the case in the past. The US dollar also has weakened quite a bit this year. So it seems like something fundamental is shifting. And the other concern is that in addition to the huge amount of increase in debt issuance that would result from the tax bill being passed, from the fiscal bill being passed, which would lead to significant tax cuts, there have been very significant liquidity problems in the Treasury securities market. This is seen as the most liquid market, which means that it's very easy to buy or sell large quantities of Treasury securities. But a variety of regulatory and other market changes have really affected liquidity in this market. So this is a market that is really looking very fragile right now because of the huge increase in supply of US Treasury securities likely to come onto the market, while the demand seems to be somewhat easing. And given that this is the benchmark asset for US financial markets, and indeed for global financial markets, if there are any problems in the US Treasury securities market, it's going to affect all of us.
Right. I'd also like to ask you about the move away from dollar. And we're seeing this in Asian markets, growing focus on how to use local currencies for trading to avoid the risks related to currency fluctuations. Do you think Donald Trump's tariffs will further increase the pace of de-dollarization?
There are other changes actually that are going to be far more important than the tariffs. The US has been using dollar dominance as a weapon against its geopolitical rivals through financial sanctions. And in some of my writings, I've argued that the size of the US economy, the depth and liquidity of its financial markets are very important for the dominance of the dollar. But equally important are the key elements of the institutional framework, which includes the rule of law, a system of checks and balances between the government and between various arms of the government, and also an independent central bank. And Trump has essentially taken the hatchet to every element of the institutional framework. So we should be seeing a reduction in the dollar's use. And there are technological developments that also should be leading to a diversification away from the dollar as a payment currency. We are seeing China, India, many other emerging market economies set up their own payment systems that can more directly communicate with the payment systems of other countries. So you don't need a vehicle currency like the dollar or the euro in order to intermediate transactions between these currencies. But the curious thing that has happened is that a lot of these changes have taken a bigger toll on some of the other reserve currencies, such as the euro, the Japanese yen, and so on. So yes, the dollar share as a reserve currency has slightly shrunk in the last few years, but there's been a great deal of fragmentation in the second tier, which includes the euro, the yen, the pound sterling, but also the Chinese renminbi, the Indian rupee, and some other emerging market currencies. So we have this curious phenomenon where the dollar is a little less dominant in absolute terms, but in relative terms, it still retains its dominance. This is not a story of American exceptionalism, in my view, but about economic and financial weaknesses in the rest of the world. But certainly, some diversification away from the dollar, both as a reserve currency and a payment currency, is in the offing, and we seem to be seeing the beginnings of that. But I'm not expecting, full-blown knocking of the dollar off its dominant pedestal as of yet.
Right. Since the start of this year, and you've also mentioned about the weakening of the dollar index has weakened 8%. What would you expect possibly in the next few months?
Now, it's worth keeping this in perspective because, yes, the dollar has weakened by about 8 to 9% on a trade-weighted basis against most of the other major currencies since the beginning of this year. But from September of 2024 to January of 2025, it went up by about 9 to 10%. What happened is that towards the end of last year, it looked like the US economy was continuing to perform very strongly, while the rest of the world looked like it was in a shambles, except for India, which has continued to grow very well. In the beginning of this year, especially with the imposition of the tariffs, that narrative changed. While the rest of the world was certainly going to take something of a hit, the effect of the tariffs was going to be much greater, relatively speaking, on the US economy. So the relative change in the US growth prospects and the likelihood of a Fed rate cut perhaps increased. So you could explain the dollar's rise and then the decline since the beginning of this year as largely driven by macroeconomic factors. But as your question suggests, there might be something deeper going on where there is a desire for diversification away from the dollar, which might be adding to this dynamic in the foreign exchange markets. So at this stage, it looks like the dollar has stabilized. And what happens with the trade negotiations, with the tariffs, for which there are many deadlines coming up in the next few weeks to see whether many of these tariffs will stay on or will be rolled back, that's going to be crucial.
Right. Of course, so what happens on the 9th of July would be very important to see if those reciprocal tariffs come into with full effect. I'd like to ask you about the India-US trade negotiations as well. And we have been speaking to experts today after a conclusion of 6 days of negotiations here in New Delhi. The worry is that US is using very coercive tactics to have a deal with India and pressurize India to open up its agricultural sector, bring down non-tariff barriers, have digital trade on US terms, all of this before the 9th of July. If we end up having this interim trade deal and also a full trade deal with the United States, how much of this is going to help the Indian economy, according to you?
Now, I think India is very well positioned in terms of where it is on the geopolitical divide right now, because as you know, US-China tensions seem to be coming off the boil a little bit. But I think given the bipartisan hostility towards China, there is going to be at least a modest decoupling between the two economies in terms of trade and financial flows. And many American manufacturers are looking to relocate their supply chains, and India is very well positioned in order to take advantage of these geopolitical and economic dynamics. So I think a trade deal would certainly be very helpful in that context. The worry I have is about how durable such a trade deal is going to be. We've seen that even long-standing trade deals, for instance, the North American Free Trade Agreement, which became the US-Mexico-Canada Agreement, even the second iteration of that, which Trump himself negotiated, has been opened up for renegotiation once again, with Canada and Mexico initially being hit with tariffs by the US, although that got rolled back. So my worry is that India might give up a lot, but not really get the sort of durable reduction in trade barriers between the two countries that it would hope for. But certainly, anything that can de-escalate the tensions between the two sides and open up trade and, more importantly, financial flows between the two countries is going to be helpful. And the question is whether this deal can be structured in such a way that India does not take a very big hit in terms of some sectors that might not do very well faced with foreign competition. But at the same time, where the US side and particularly Trump can declare a win. So as in many other bilateral negotiations, the question is how best to craft a deal in a way that Trump gets his win without India necessarily giving up too much.
All right, Professor Prasad, thank you so much. It was a pleasure having you on our show, Global Lens, and giving us your perspective on not just the US CPI data, but also the diversification away from the dollar and the India-US trade deal as well. Let's move on now and get you a quick look at the other headlines. Israeli forces have killed at least 120 Palestinians and injured more than 400 people across Gaza in the last 24 hours. The military has also killed at least 57 aid seekers at a food distribution site in southern Gaza. Meanwhile, Britain, Australia, Canada and New Zealand have imposed sanctions on two far-right Israeli ministers for inciting extremist violence against Palestinians. Russia and Ukraine have exchanged. Yes, now moving on to Russia and Ukraine, they have exchanged over 1,000 captured soldiers. This is the second stage of the agreement struck at peace talks last week. This comes as Russia attacked Ukraine's capital, Kyiv, with waves of drones and missiles killing one person. Ukrainian President Zelensky called the attack one of the biggest strikes on Kyiv in the three-year-old war. Los Angeles police carried out mass arrests following the imposition of a curfew by Mayor Karen Bass. Amid ongoing unrest, LAPD reported nearly 200 arrests on Tuesday alone. The protests sparked by immigration raids have spread to other cities, including New York, Chicago, Washington, D.C. California Governor Gavin Newsom slammed President Trump's deployment of National Guard troops, saying democracy is under assault. The U.S. Court of Appeals for the Federal Circuit has temporarily put on hold a lower circuit court ruling that found Trump exceeded his authority by imposing tariffs under emergency powers. The full 11-judge panel will hear the case, citing its exceptional importance. The court has ordered an expedited schedule for arguments. US chip giant NVIDIA is making a major push into Europe. CEO Jensen Huang announced plans to expand the continent's AI infrastructure. The move includes partnerships with local firms to help build a homegrown AI ecosystem. Huang expects Europe's AI computing capacity tenfold within just 2 years. French President Emmanuel Macron says he would push for a European Union regulation to impose a social media ban for children under 15 years of age. Macron's comments came after a fatal stabbing incident at a school in eastern France. Macron blamed social media for violence among the youth. He added that age verification should be implemented on online sites selling knives in France. Let's take a short break. The United States and China have agreed on a framework to revive the trade truce, back on track following 2 days of negotiations. Coming up, on the other side, we speak with Brian Wong, Assistant Professor of Philosophy at the University of Hong Kong. Stay tuned. Welcome back. Let's shift focus to the trade deal between the United States and China. In a post on social media, President Donald Trump said, and I quote, "Our deal with China is done, subject to final approval with President Xi and me." Trump wrote that China will supply the necessary rare earths to the U.S., while the U.S. will allow Chinese students in its colleges and universities. Trump added that U.S. will impose 55% tariffs as against China's 10% tariffs. But will the two countries have a lasting deal? To discuss this, joining us on the show right now is Brian Wong, Assistant Professor of Philosophy at the University of Hong Kong. Mr. Wong, thank you very much for being with us. Let me begin by asking you about the rare earth magnet issue. This is possibly the biggest geopolitical issue right now. Do you expect China to lift the export curbs for the United States completely, as Donald Trump is hinting?
Thank you very much for having me. I think much of this would inevitably turn on the extent to which the Americans are sincere and also committed in delivering upon their end of the bargain. Recognize that the weaponization of rare earths and also by extension all forms of strategic commodities is increasingly in fashion from all of the major powers and also regional powers across the world. America in relation to advanced semiconductors and also related manufacturing ingredients, China with regards to rare earths, and of course, in the case of Russia and also numerous other players in the Middle East, you've got threats of withholding of oil exports and also LNG supplies. So this is a sign, right? These are signs of the times we're in right now. And I would say that whilst Beijing is in principle open to playing ball and open to lifting all of these restrictions, much of the extent to which it actually follows through on this would turn on when not Washington is willing to keep to its side of the bargain in relation to matters that Beijing sees to be geopolitically integral to its own interests. That includes, of course, fault lines in the South China Seas, over the Taiwan Straits, and on a more, distant level, perhaps its interests in seeing to that Chinese students, including ordinary citizens and civilians with no affiliation with the party apparatus, seeing to that they can have the rights to enroll into foreign universities and international universities in America respected. So that's what I would say the current state of play is really contingent upon, which is where not the Americans can be trusted to follow through and stick to their promises.
Right. 55% tariffs on US, 10% tariffs on China. How does this augur for the Chinese economy?
Yeah, very good. So I think you meant sort of 55% coming from the US side and 10% on a part of the Chinese vis-a-vis goods, or rather exports from the other party. And on this note, I'd say it's going to be tough. The short to medium term prognosis is it's going to be very tough on China, given its incredible dependence upon exports in several sectors, especially, of course, advanced manufacturing, higher end electronics, and of course many of the consumer goods that are not usually particularly welcome or embraced by the domestic markets. It's going to be tough in the next year or two. But here's a reason why I think ultimately these tariffs and trade barriers would benefit China. And that's because for a very long while, the Chinese have struggled to find sufficient political impetus and momentum, especially in a part of technocrats and administrators in the system, to make the case for a genuinely pro-consumption growth direction, for a growth direction that is not dependent upon China's ability to manufacture all these wonderful goods at extremely low prices and sell them off to the world, but instead to shore up the domestic resilience and ability of the Chinese economy to absorb such capacity. Now, with these trade tariffs and also protectionist measures in place, what we've seen effectively over the past 9 months is precisely folks within the Chinese system, who are more sympathetic towards a more comprehensive approach to growth, saying, look, guys, we've got to rebalance. Look, guys, we've got to diversify beyond leaning just into exports and advanced manufacturing. And in the long run, such transitions or such transformations would be utile for the Chinese economy and the people at large. And that's for a number of reasons. One, investment-led growth had really reached the end of its runway in many ways, right? And two, it was far too geopolitically unwise for China to hedge all of its bets on export-led growth, given how easy it is for other countries to slap on tariffs and barriers and restrictions of all sorts that we've seen over the past 6 years. And three, and most fundamentally, what the Chinese economy most certainly would benefit from today is a confident and emerging middle class that not only consumes domestically made goods, but also imports more from the world, imports from, wonderful burgeoning economies like India, like Southeast Asia and ASEAN, and where with China, India, and ASEAN in conjunction and in combination with one another, we could very well see, the rise of a new economic order centered around Asia, centered around China, India, and ASEAN, which is dubbed by my very dear friend, Professor Kishore Mahbubani, to be the CIA countries, so to speak, of the world. And that is why, fundamentally, I think the reforms that China really needed to undertake at least a decade ago, finally, these reforms are coming, and we should be grateful that they're happening today.
What impact will US decoupling from China have? We have seen how significantly US imports from China fell down drastically recently, and this was at the highest level since February 2020, since COVID-19. How do you think this is going to impact the Chinese economy in the months to come?
Yeah, very good. If we look at the predictions released by Goldman Sachs from approximately 1.5 months ago, which really is too long by contemporary Trumpian standards, even it doesn't seem that long, the estimates had it that a 50% tariff imposed by the US on China which is really where the currently effective rates of tariffs are, right? Around 51% also as we speak. You know, a 50% tariff rate would cause a 1.5% drag on the Chinese economic growth rate this year. And if that's doubled to say 100, then you'd get an extra 0.9% drag, such that there'd be a negative 2.4% drag in total on Chinese GDP growth this year. And that stems from two major factors. The first being the significant sort of shocks, right, and the challenges encountered by domestic producers in China in relation to the withdrawn or withheld orders coming from the US. And the second reason being, of course, the dent on consumer and producer confidence, which if you look at the most recent Caixin survey that was conducted around 2 weeks ago, and the results came out shortly after that, they didn't look good when it came to the PMI, right? And that really is usually a fairly decent proxy for the extent to which producers are confident and optimistic about their economic trajectory. But again, I'll return to the point I was making just then, which is that this pain in the short term offers a much needed galvanizing catalyst for the Chinese state to look at its long-standing structural challenges, which can be ameliorated, which can be fixed and addressed, but require them to actively bolster the living wages of the citizens, to improve the level of youth employment and equality of jobs on offer, and finally focus on, in strengthening the welfare system and fostering a basic safety net that allows for households to spend and consume confidently. I hope these changes are coming, and I'm cautiously hopeful that they will.
All right, Brian Wong, thank you so much for joining us here on Global Lens with your view on the US-China trade truce and the framework that has been agreed upon in London. Let's move on and get you some trending news from around the world. Japanese company Nintendo is making a lot of noise with the record-breaking sales of Switch 2. The company sold over 3.5 million units in just 4 days. This makes Switch 2 the fastest-selling gaming device till date. The company had a forecast sales of 15 million units of this device in FY26, and the latest sales numbers indicate it may be well on track to achieve more than the target. That is what analysts are claiming. Tesla CEO Elon Musk has set a tentative launch date of June 22nd for the company's Robotaxi service. The Tesla Robotaxi is a level 5 autonomous vehicle, which means that it moves without any human intervention required. The rollout is set to take place in Austin, Texas. A human-sized Labubu doll was auctioned in China for a whopping 1.08 million yuan, that is 1.2 crore Indian rupees. As per Reuters, this puts the toy among collectibles as against its earlier image. Also, the growing popularity of this plush toy has led to the shares of PopMart, the designers of the toy, popping up in trade after it saw strong demand for these dolls. The launch of Axiom 4, carrying Indian astronaut Shubhanshu Shukla and 3 others to the International Space Station, has been delayed once again. SpaceX has cited a liquid oxygen leak in SpaceX Falcon 9 rocket for the delay. The leak, which was found during booster inspections, requires repairs and validation before the launch. And on Final Cut this evening, Austria is observing 3 days of mourning after 10 people were killed in a school shooting in Graz. Local residents lit candles and held a minute of silence for the victims of the shocking tragedy. Students were seen sitting in their classrooms when a former student opened fire on them. We leave you with these pictures from the streets of Graz. That's all from us on Global Lens. We'll see you same time, same place tomorrow. Thank you for watching.